As we break into 2025, mortgage rates on a 30-year loan are above 7%, leaving many Americans thinking the same thing. When will rates come down? Let's answer that question. So in order to know whether or not rates are going to come down, we have to know the leading indicators that cause it to go down. Now, to track the 30-year mortgage rate, we use daily mortgage news, but to track what's going to happen to the mortgage rate, we have two other numbers we can track. We have the federal funds rate, which is the rate at which our Federal Reserve lends to banks within our country, and the 10-year Treasury yield, which is the amount that an investor gets paid off of basically investing into our country. Now, the 10-year Treasury yield gives us a great outlook on American investor sentiment. What is the overall sentiment of our economy? How do investors at macro feel about it? The lower that yield typically is, normally means the healthier economy we're leading into. When this yield is high, it usually indicates investors are a little bit iffy about our economic future.
Very skeptical. Needing
a higher return for them to want to invest in our country. And the federal funds rate hit an all-time low at 0% through the summer of 2020. You'll remember a virus we just passed over from there, but has since then raised to near all-time highs and bringing the mortgage rate along with it. Now, how could these numbers drop? Very simple. We have one number that we can track to see if all three of these numbers could potentially drop. And that's the fun fact about all three of these numbers, because if we put up all three of their graphs to track how they move, we can see that the 10-year Treasury yield, the federal funds rate, and the 30-year mortgage rate seem to all move in tandem. And historically, this has remained true, and that's because they're all really tethered to one item. And that one item is inflation. Now, inflation is the bane of America's current economic existence, with the dollar being weaker than it was just 4 or 5 years ago, and that dollar not feeling weaker in any spot more so than in housing. With mortgage rates causing mortgage payments to exceed now $2,500 a month on median, and home prices following closely behind, with the median home in America being well over $400,000. This has caused millions of Americans to be priced out of being able to buy into this housing market, and millions of other homeowners to sit pretty on their low mortgage rates, knowing they couldn't get that in today's market. This has created a lock-in effect, which is suppressing our supply, all while creating an anticipatory demand, all eyeing one thing: mortgage rates coming down. So when will it happen? Well, Compass recently put out a study stating that they don't believe that rates are going to drop at a significant rate, and they stated that the mid to low sixes could be where it ends up landing by the end of 2025. Freddie Mae, Fannie Mac, Bankrate, and many alike stating that they don't believe interest rates will drop at a significant rate in 2025, putting our end of year guess at anywhere between the high fives to low sixes. So A, are they right? And B, why do they think rates won't drop that much? Well, it's all dependent upon this one guy named Jerome Powell.
Hello, everyone. Good afternoon.
Thank you, Dean Traynor, for the invitation to speak here today.
Jerome Powell leads the Federal Reserve and its governors and handles all of the PR. He gets out and does this post-game interview after meeting with all the central bank's leaders and says, hey, we reviewed all of the numbers, we reviewed the jobs, we reviewed the GDP, we reviewed interest rates and everything that has to do with inflation. So we're going to put out this report, and then he fields about an hour's worth of questions after giving kind of the summary of where we're at. And that report gives us everything we need to know, because it tells us about where inflation is in America. Now, the Federal Reserve has stated many times that their goal is to get inflation to below 2% on each and every one of these reports. And if they were to accomplish that feat consistently, they would in turn see the ripple effects of lower mortgage rates. But based off a meeting they had at the end of December, many Americans believe the Fed rate isn't going anywhere fast. With the Fed putting out they only plan to drop rates by about half a point in 2025, which has created a very bearish outlook on mortgage rates as we walk out of 2024, an already high mortgage rate market in comparison to home price, to a new market of 2025 with still seemingly extremely high home prices in most areas and mortgage rates that will probably remain in an uncomfortable spot for millions of Americans. 5.2 to 4.75% seems to be the magic range that many buyers and sellers alike would be comfortable with joining the housing market. And though rates remain high, 5.25% to 4.75% seems to be the economical sweet spot that most Americans want to see. Why? Because this would be the spot that would unlock enough home buyers to fuel the demand that's needed at an affordable rate, and maybe convince some sellers to have those low mortgage rates to give their home to the market and maybe relocate, get out of that home, or heck, maybe it was a starter home that they ended up buying into that they didn't think they were going to have to keep for 5 to 7 years. Either way, we need more inventory and we need lower rates, but we're more than likely not going to see those lower rates this year. Our prediction for 2025 is that rates get to as low as 6.15%. 2025 seeing another percent coming off of that, getting us into the low 5s. But for those looking to see the 4s again, you may be looking to and through 2027, as the next administration has laid out a plan that many economists believe will cause more inflation, not only on the cost to build the home, but the labor that's needed, and of course, the mortgage rate that's attached to it. Whether or not rates do move up, though, we'll continue to track. We'll track the warning signs so you can get ahead of the game and know what moves to make before they happen. Subscribe for all things housing and reactions to what's going on in this wild world of the 2025 housing market in America.